Happy Monday, everybody. I hope you had a great weekend. It was another big week for markets. And since we actually had 5 full trading days for a change, let's jump in, recap last week's market, tell you what it meant, and then, of course, preview this coming week. Today is July 15th, 2024, and this is your Monday market update. Last week broke the mold somewhat. The week after jobs week is usually pretty quiet, but the calendar did not hold that last week. We had Fed and we had earnings. Let's see what that was all about. Markets opened to new highs again on Monday after a relatively quiet weekend. For financial news, there was news on the geopolitical front as movement in the Middle East was rumored. France was a better than feared result, so that put that back on the rear burner. Markets gapped higher at the open, then cooled off and eventually sat to wait to hear from Powell on Tuesday and the rest of the news that was set for the week. The only eco data was the New York Consumer Survey, and the inflation expectations were down a bit, so that was positive in that camp. Overall, it was a quiet day of sorts. The Dow closed down less than 0.1%. The S&P was up 0.1%, and the Nasdaq was up about 0.25%. As we've seen a lot lately, stocks gapped up on Tuesday with, yes, you guessed it, mega cap tech leading the way. Not much on the newswire. Small business optimism is actually rising, and all eyes and ears and algos are all on Powell's semi-annual presentation to Congress, used to be called Humphrey Hawkins testimony. Nothing new from Powell, still dovish, still balancing risk with the dual mandate, and notes cooler labor markets and softer real estate markets. Solid 3-year Treasury auction, and markets moved higher as yields moved lower. At the end of the day, markets were up but closed near session lows. Just looking at the Powell testimony, not much to unpack that has not been said 100 times by he or some other Fed heads. But to summarize, he said again that the Fed needs some more good data to support rate cuts, and that should be no surprise, exactly what they've been saying. Second, the Fed, and only the Fed, seems to be focused on slowing growth. Well, the Fed and myself. And the markets, nope, those are not. The market is currently not pricing in any slowing growth in the economy. Last time, my favorite quote from Powell was, "I'm not seeing the stag or the inflation." You may recall. This time, "Inflation is not the only risk we face," was his quote. "I continue to maintain that inflation and rates are not so much what will drive the markets going forward outside of the real short term. Growth and earnings that come along with it will be what becomes the new catalyst for the long-term market returns. Always has been. We'll see if it keeps going." At the end of the day, Dow was down less than 0.25%, the S&P up 0.1%, the Nasdaq was up just under 0.25%. For the third day in a row, markets gapped higher again at the open on Wednesday. Powell was back in testimony, and there was nothing new to report again. Soft landing is still the phrase of the day. There was a 10-year Treasury auction, solid demand, lower rates, and stocks got a fire under them at the close. Eco data and earnings were on deck. CPI, PPI, bank earnings. Markets had pretty solid acceleration up into the close. By the end of the day, the Dow, S&P, and the Nasdaq were all up a bit over 1%. By the opening on this day, the S&P was up close to 18% for the year. If you take the Mag 7 out, that same S&P would be up 8.25%. So as the next highlight of the week came online, CPI was a bit cooler than expected, and the labor market was still tight before the open. Futures looked like the markets would gap open for day 4 of 4, gap up. Closer to the actual open, markets gave all that back, or at least most of that back, and then at the open, 4 for 4, markets gapped higher. But by lunch, a major U-turn in Mag 7 mega tech led the reversal. One day, actually a few hours of one day, and everyone is thinking that the turn has begun. By the end of the day, the Dow stayed positive about 0.1%. The S&P was down over 0.75%, and the Nasdaq was down close to 2%. For a quiet tape early in the week, the Friday tape was pretty busy. PPI was a bit hotter than expected, and earnings, remember those things that I keep telling you about, they will be important, proved to be market moving. Banks were the pouring cold water on the market type. JP Morgan and Wells Fargo both beat earnings, but loan loss provisions and consumer outlook had both headed lower at the open. Citi was holding up early, but gave all that back also. And one of the big surprises was small caps, up early as well. Regardless of all this noise, make this 5 for 5, gapping higher on the markets. On the surface, things look tame. But under the hood, there was a lot going on. Lucid, Tesla, banks, small caps, PPI, CPI, labor, Fed testimony. But if you only look at those top lines, the Dow, the S&P, and the Nasdaq were all up about 0.5%. For the week, the Dow was up 1.5%, the S&P was up just under 1%, and the Nasdaq was up 0.33%. Let's take a moment to look into this week. Earnings galore. More banks, Johnson & Johnson, Netflix. Watch for Amazon Prime Days that are this week as well. We will start today with some eco data that is important as we look for slowing growth, and this will be the first read for July activity. Fed heads will also start off today with Powell. For the week, we'll get Daly, Kugler, Barkin, Waller, Logan, Daly, Bowman, Williams, and Bostic will also get retail sales, which I do think will be worth watching, probably the most important of the week, to see what it means to the consumer and growth. And add in the beige book and jobless numbers, and we will once again have a busy week. Oh, and any additional fallout for the first assassination attempt since Ronald Reagan, and the opening of the Republican National Convention, and the announcement of who will be running as the vice president on that ticket. I'm not sure how much of that will all play into things long run, probably little, as we've talked about. If it does move things, it dislocates them in the short term, maybe we should discuss opportunities. For now, keep your goals in mind, stay disciplined. Friday's video was all about that if you didn't get a chance to watch that. And times of volatility call for that discipline. So please keep that in mind. Come back on Friday for another planning video, and please stay in touch. Have a great week.